Hey everybody, Tom Gentile. Welcome to my market update, Tom's Trading Room. It's May 3rd, 2017. Haven't done one of these in a few weeks, so I thought I'd update you on what I see happening in the markets. Let's get started with the S&P. You know, stocks have really kind of been in a rut for the last couple of months. We are in a situation where you see the highs that have gotten a little bit lower, with the exception of this breakout that occurred just a few weeks ago. We've got support that's happening above 230, in between 230 and 232. More recently, we're looking for this market to break one way or another. I suspect that we're going to get another break to the upside, because we've got some heavy resistance up here above 240, and I'm expecting very soon we're going to see the markets at new all-time highs for the S&P, so they can follow in its footsteps of the NASDAQ. All right, and the Dow I expect will do the exact same thing. So that's what stocks look like they appear to be doing. The bond market should be doing the exact opposite, in so much that just not even a couple weeks ago, bonds had jumped up, and we saw a sell signal. We had a buy signal down here using our darknet signals right around the middle of March. A couple weeks later, we had to sell. We haven't seen a buy signal yet, and therefore we do starting to see that this market looks like it wants to break down once again back below 120 for TLT, or the iShares Bonds Index. Let's take a look at currencies. So I love looking at the Eurodollar, and the reason why is because the Eurodollar is one of those, or it has been one of those, risk-off assets. That means that it usually goes up when the market goes down, and vice versa. As you can see with our swing trading, darknet signals, we've had nice buys with sells, buys, sells above, buy, sell above. We haven't seen one in the last couple months. I don't suspect we're going to see a buy very soon in FXE. I think FXE made a jump up, and I do believe we're going to see a pullback in this particular currency, especially if the markets go higher and signal that there's a renewed buying interest going on in the markets. I do see a lot of this as being short-lived, though, because of one thing that I like to call sell in May and go away. And that typically happens every May, between May and through October. The markets tend to get a little more pressure put on them, as a lot of traders simply go to cash. Last thing I want to look at is the oil markets. This is USO. It's the ETF for oil that we use that tracks oil. And I got to tell you, with the pressure that's put on oil by the glut of it that's out there, the renewed interest in drilling, and of course, we've got all these alternative energies taking front and center stage. This is putting pressure on the oil markets and USO. We actually have a buy signal in oil from just a few days ago. However, if we take out this low that you see right here, then I suspect we're going to start to see new lows in USO and crude, and that could take us down to the $9.50 level, which, if you go all the way back to November, that's where the resistance or the support is on this particular chart. Hey guys, everything I do and everything I'm showing you is coming from our tool set at www.tomsoptiontools.com. You can get a free trial from any of our packages that you see here. And all you got to do is just go to tomsoptiontools.com and get that free trial and try everything out, from our options, our back testing, the darknet contrarian system, and signals that I just showed you in our videos, as well as the money counter and much, much more. All right, I'll see you again here, same time next week. Till then, have a great trading week.